What is going on, people? My name is Ricardo Carrillo. Welcome back to the Ricardo Carrillo Show. I'm just kidding. No, this is my weekly deal of the week videos. I am a nationwide mortgage broker. My team and I, we cover the entire US for financing. Right now, we service all 50 states across the entire US, and we actually just got Puerto Rico a couple of weeks ago. It's pretty cool because I get a really good bird's eye view on what my clients are doing, where are they taking their investment deals, what kind of investment deals are they going after. It allows for me to provide so much more feedback and real-time feedback too to all of my new investors. Like any new client that comes to work with us, they get to hear about all of the success stories and everything else, and even the bad stuff that actually happens, because for me, I have no problem with telling my clients not to take a deal if I feel that it's not going to be a good investment for them. You're going to hear me say all the time that if the numbers make sense, then the deal makes sense. And so I think it's super important that I continue to show this to you guys, where I give you real-time feedback of deals that our clients are working on, what the numbers look like, what the deal looks like, what we did in negotiations, how we spoke with the realtors, how we spoke with the sellers. Everything from top to bottom. My team and I will walk you through the entire process. We have all the resources for it. The best part of it is it's completely free for you. So let's jump right into this video. This is for a client of mine who's purchased multiple properties with us, multiple investment properties. I always like to talk about these because I've had people, who've done 6, 7, 8 deals, 10, 11, 12 deals with us. And it's interesting, like as we start to help our clients scale their real estate portfolio, the strategy sometimes changes. Real estate industry is one of those things where as you start to see, the kinds of properties that are popping up, you start to see what kinds of deals you like to go after. It just provides you with more feedback. It's very much of a learning experience. I always say, like, just go try something. If you want to get into long-term rentals, go try it. If you want to get into short-term rentals, go try it. If you want to do Section 8, go try it. Like, I personally am the same way. I've done commercial, I've done long-term, I've done short-term. I'm working on Section 8. I've done fix and flip renovation projects. So, in everything that I've tried, for me, I'm like, do I like it? Do I not like it? Do I want to keep doing it? So it's one of those things that helps me gauge what's making sense. And then I can also really just provide that feedback for our other investors. So jumping right into this deal, this was a short-term rental property that our client purchased in Oakhurst, California. There's not too many short-term rentals that we help our investors purchase in California simply because of restrictions. There's so many restrictions in a lot of different markets here, which makes it tremendously difficult to be able to secure financing. A lot of cities and counties have short-term rental restrictions. They don't want you to rent a property out for less than 30 days. And really, it just makes it a lot more difficult. Oakhurst is one where I have had many investors purchase properties, and they've done really well. This property was a single-family house sitting on 4 acres, and we actually used a conventional type of loan program. Now, you will hear me talk a lot about conventional financing. Conventional financing is one of the most traditional type of loan options that people utilize when they're scaling a real estate portfolio. And the reason why I recommend utilizing conventional financing is because on a conventional loan, you're able to maximize a minimum down payment. So it's the absolute floor as far as like, what would you actually have to spend out of pocket? You can purchase properties with a minimum of a 3 to 5% down payment when it's a house that you're planning to move into. You can purchase a property with a 10% down payment if it's going to be a short-term rental. There's a lot of different things that we can do in order to continue to buy more real estate. And really, the biggest thing that you're going to hear me talk about is how can we keep the amount of money that you're spending as low as possible so that you can continue to reinvest that into more deals. That's the most important. This property was 1972 square feet, 1900 square feet of living space, and it sat on 4 acres, which is huge. There's so much room of things that you can do on acreage. You could do golf courses, you could do pickleball courts, you can do volleyball courts. I've had people do some of the craziest stuff with these short-term rentals. And it was a 3-bedroom, 3-bathroom property. So single family home. What's cool, this property was I would say it's a relatively streamlined way of how we had done it. We actually were able to use short-term rental data when we were qualifying this client and this property. Because they already owned short-term rentals, it was actually harder to qualify for a new purchase. But what we did was we worked with a bank who allowed us to use projections off of short-term rental data, short-term rental income, what the property would be bringing in if it was set up as an Airbnb. Now, the thing is that even though we have over 120 different banks that we work with, over 3,000 different loan programs, the most important part is that there's so many banks still who don't want to use short-term rental specific income. When they're looking at income, it's based off of the appraisal. So the appraiser who goes out to the property is actually responsible for doing two different kinds of reports for us. One we call just like a regular appraisal, and then the second one is what we call a market rent analysis. And all they're really doing is saying, well, if your property was going to be set up as a investment property, how much revenue would it be bringing in if it was set up as a long-term rental? So surprisingly enough, even to this day, most banks will go off of long-term rental data only, which actually makes it really hard, because if we're thinking about the 1% rule, which was like one of the oldest real estate strategies, $1 million house today is not going to be renting for $10,000 a month as a long-term rental. It's just not. And so the only way to get that kind of income to cover a big mortgage payment is to use short-term rental income. And so we've actually had some of our banks that have eased up on those restrictions. We have appraisers in a lot of different short-term rental markets that we can get them to put short-term rental data on the appraisal for us. And that's what ends up helping us in covering the mortgage payment, and then also showing that our clients can actually qualify for more. So that's what we ended up doing in this situation. Now, we did it as a conventional investment loan. The minimum down payment for a conventional investment loan is actually 15%. However, for this deal, we ended up doing 20% down just for where the client was more comfortable. The appraised value for the property was $599. Purchase price was actually also $599. I cannot write today. And then minimum down payment is 15%. However, we ended up doing 20% down on this deal, which actually ended up coming out to $119,800. In total, yes, it's a lot of money out of pocket. However, when we're thinking about short-term rentals, one of the biggest things I'd say that a lot of my investors are doing is we're purchasing short-term rentals not only for cash flow, but also for the purpose of tax savings. A lot of my investors that are purchasing these Airbnbs are individuals who have, multiple six-figure W-2s. Of course, I also have those investors who, sometimes don't even have income. They're just purchasing short-term rentals. There's so many different loan programs that exist that we have access to. We can pretty much offer every kind of loan program that exists. But for the majority, I have so many investors that are buying investment properties because we're also trying to save money, and not have to pay all of our money to Uncle Sam. And so when you have a high W-2, it actually helps you to purchase short-term rentals. You can use a short-term rental loophole, have more tax savings, limit the amount of money you're spending to Uncle Sam on W-2 income, and you have a profiting short-term rental. You're getting appreciation. So there's so many different factors as to why I have people go after short-term rentals, and also why, frankly, short-term rentals are way more popular today than they were, a couple years ago. Interest rate on this deal, we ended up locking in at a 7.75, which I would say right now is relatively close to what we would be at. I think most of them right now are in about the low sevens as of today, which is what we're in December at the moment that I'm recording this. And so, the interest rates have been in flux for the last 6+ months. They've been all over the place this year. A lot of my investors, including myself, are leaning towards the side of saying that interest rates are going to come down in the next 12 to 18 months. And so refinancing is going to be a very big thing that we're going to see in the coming months and in the coming year. We ended up doing this on a 30-year fixed mortgage. And so principal and interest for that 30-year fixed mortgage came in at $3,433 with 5 cents. Can't forget the 5 cents. Homeowners insurance was at $77, which honestly is really cheap. And I think the reason why was simply because of the fact that we just ended up getting a regular investment policy. My client didn't go look for a short-term rental policy, which they can always update that later. Property taxes were at $587 with 28 cents. PMI, there was no PMI simply because of the fact that we didn't do less than a 20% down payment. And so PMI is considered private mortgage insurance. It's essentially where you're getting a lender to place insurance on the not on the property, but on you, basically, in the event that you were to default on your mortgage. Like for them, the most important thing is making sure that they get their money back, of course, right? And so part of that is making sure that they cover themselves. They do that by getting PMI. However, in this situation, when you're putting 20% down or more, or even using other types of loan programs, there is no PMI. So no PMI on this deal. Total monthly payment ended up coming in at $4,098 with 16 cents. And then total closing costs, jumping right into it, because monthly payment was right around $4,000. Total closing costs was $22,458. Oh my gosh, I cannot write today. 458 with 67 cents. Now, I would say that that's somewhat of a little bit of a higher number than what I typically see for closing costs. I would say that on average, I suggest estimating around 3%, like 3 to 4% for closing costs on most investment properties. So if we're assuming, a 600K price, 3 to 4% kind of puts us in that range, right? It's like that 18 to 24K range. So it's somewhere in that ballpark. Sometimes it can be a little bit higher. It really fluctuates. There's so many variables that come into closing costs. My biggest thing personally is saying, let's try to negotiate as much money as we can from the seller to cover all those closing costs for you. I love structuring deals. Literally my favorite thing about this industry and what I do today is structuring deals. And so doing that in upfront negotiations, talking to the agents and saying, hey, let's do this. It's going to help our clients save X amount of more money. If we can limit that money up front, you can use it to reinvest it in the future. You can spend it on amenities, on furniture, design, etc. And that's what really helps you make that extra dollar and have that higher average daily rate or ADR that you would get on short-term rentals. So it's very important. And we did that in this situation here. This client ended up negotiating $4,141 in seller credits, which brought down that total closing costs number. We also had adjustments and other credits. Adjustments and other credits was $189. It was relatively low. Adjustments and other credits, which you'll actually find in the very, very bottom of your estimate. Whenever you're closing, you'll see it in your closing documentation. It'll be at the bottom. It's essentially a number that that's either coming to you or that you're spending because of the property taxes. And so we know that property taxes are paid by the seller for a certain amount of time. And then, if you buy the house and you're going to have property taxes that you're paying, there might be like 3 months where the seller has already paid property taxes. And so you would get that money, or the other way around, you'd give that to the seller. It can be a little bit confusing. Title companies take care of the adjustments and other credits for us. And so they'll put that there as a line item. Sometimes you get money back. Sometimes you got to pay a little bit to the seller. In this situation, he paid this $189 and it wasn't really that much. And so this puts our total out of pocket at $137,928 with 48 cents. So about $138,000, which if we look at our down payment was almost $120. In total, I spent an additional $17K really on out-of-pocket costs, which honestly is not a huge amount in the grand scheme of things. It'd probably take them, another $75K, maybe $50 to $75K in setting up the property. This one was a little bit more turnkey. It's cool that I get to see where these different properties are going. And then for me, when I help my clients with refinances, we get to see what current numbers were looking like. And so that's what tells me, hey, go invest in this market or start suggesting a different market to some of my investors. And really, that's what helps our clients find better deals. We do the upfront negotiation. We help you look at the numbers in the underwriting. We find the best loan program for you that's going to save you the most money. And then we can even put you in touch with the realtor in that area to help you submit the offer. So we really will cover it, everything full service. It's my favorite thing to offer. We've built so many resources and so many people that we've worked with over the years that, something we just started offering most recently was actually business funding. I have a lot of investors that are doing these short-term rentals, and then they're like, hey, I want to have 50 or 100K in 0% interest credit cards. And so we have a team of ours that helps us with securing business funding that, frankly, it gets you guys 0% interest, allows you to go buy furniture, design, amenities, a jacuzzi, a sauna, a cold plunge, whatever you want to put in your property for amenities. And you can do all of that on 0% interest. Like I said, deal structuring is one of my favorite things to do. I hope you guys found this video informative. It's cool to see what other investors are doing. It's cool to see what markets people are going into. And what I always say about real estate is people always like hearing about other people's real estate journeys. And if I can continue to shed that light for you guys and saying that deals can still be found and that there's people that we can put you in touch with that will help you find those deals, it's all about having the right team behind you. That's what gets you to closing. That's what gets you into a profitable property. And that's how we help you scale your real estate portfolio. Again, my name is Ricardo. Thank you guys for watching the Deal of the Week breakdown. If you guys haven't seen my other Deal of the Week breakdowns, you can check that out here or here. But I will see you guys in the next Deal of the Week.